We are back with another episode of the Citizen Exclusive, where we talk to decision makers in the private sector. And today is going to be all about the banking industry. I'm at Standard Chartered Bank in Dar es Salaam, and my guest today is none other than the bank's CEO, Herman Kasekende. Herman, welcome to the Citizen. It's been a little over a year since we last had the first discussion when you assumed your role as the CEO. Can you tell us a little bit about how you've been able to adjust? How has the journey been so far?
No, thanks. And I'm glad that we're doing this again. I do recall, like you said, it's about a year and I just come into the market. I think I've settled down well. I've enjoyed myself. It's a good market. Fundamentals are doing well and the bank is growing. So
Perfect. So the discussion lately in Tanzania, in Africa, pertaining to everything related to Standard Chartered Bank is the transformation that the bank is doing. When you came in April, the bank had decided to divest some of its businesses in some markets, including some markets in Tanzania. You scaled down your operations. Can you tell us the decision that led Standard Chartered Bank to decide to scale down, to sell its retail business in Tanzania at a time when it is believed that the financial sector, as far as retail is concerned, is growing locally? Why did you decide to cut that move?
okay. Now, good. I think you're exactly right, and this is something that we touched upon in our last conversation. So what we're seeing today is actually a combination of the actions that or the objectives that were announced at the results for the 2021 financial results for 2021 in terms of the strategy of the bank going forward. And coming from that, then in April of 2022, there was an announcement that Standard Chartered Bank is going to be exiting a few markets in Africa, but particularly in the Africa and the Middle East. So it was announced then that we will be exiting Angola, Cameroon.
Entirely exiting.
Yeah, entirely exiting Cameroon, the Gambia, and Sierra Leone. But in addition to that, we will then be exiting the portfolios for retail, which is a consumer, private, and business banking in Cote d'Ivoire and Tanzania. So the announcement on the 14th of July was then a conclusion. Now you could say that we are now getting into an agreement with the buyer, with the chosen buyer, who is actually coming in to buy or to take the interests of Standard Bank in the markets that I mentioned: Angola, Cameroon, Sierra Leone, and the Gambia.
So you can say that the Tanzanian market, as far as retail is concerned, wasn't growing enough. It wasn't contributing enough to Standard Chartered Bank. Is that the reason why?
So good question. I think what I have to say is that the retail business in Tanzania has been growing. It was profitable and still profitable and doing well. But the decision was actually for us now to focus on the areas that offer the biggest growth potential, where we can grow scale. Of course, there is also the objective of establishing more efficiencies along the way. But that is the core of the decision actually to exit the retail. Not that it's loss making,
Yes,
but just because it is a strategic decision, a strategic priority to focus on the areas where we can grow the scale and which offers more opportunities for growth for us.
Okay, so you can say that you're highly optimistic that the institutional banking, the corporate banking here in Tanzania offers Standard Chartered more wiggle room for you to grow. Can you just give us a bit of an analysis, your own analysis, because you're a key sector player, you're an expert in this sector. What is your view of the institutional banking in Tanzania and what role Standard Chartered Bank can play?
No, good question. We've been in this market from 1906, and our business, of course, is heavily reliant on the kind of A, the branch that we have, B, the kind of people we have, and of course the loyalty of our clients. Now, this corporate institutional banking business for us in Tanzania, from the top line, on the revenue line, contributes about 86%. And on the bottom line, probably accounting for about 97%. So we serve key segments with regard, we do business with the software. We serve the financial institution sector, the global subsidiaries, and the large local corporates. And those are some of the segments that we now want to scale up and invest more to serve our clients.
Okay. So what are you banking your success on in this new journey? And what is your confidence level? Because you've already identified a market, you've already identified an area that Standard Chartered is good at. But what will be critical, what will be key to the success in this new venture?
I don't know. Good one that you asked that. I think bottom line is to grow the scale. Okay. Now, we're counting a lot more on our investments in technology, okay, in order to be able to serve these clients. And earlier this year, we launched the straight-to-bank next year, which brings a lot more capabilities and more opportunities for our clients actually to interact with us, but also to serve them using the digital channels. So that's pretty important for us. Now, the other is that we've invested in capacity within the group. There are things that we will leverage within the group. We are a network bank. So some of the capabilities that we have, or the advantages we have over quite a number of other players, is that we are in an enviable position of providing a bridge between Tanzania and the international debt and capital market.
Okay.
We are positioned to arrange for more funding for the kind of catalytic development, infrastructure development projects in Tanzania. And one of the flagship projects that we've supported is the Sunken Gate Rail, where we so far mobilized, or we're in the process of mobilizing more than $4 billion. Okay, that goes back to what we do very well, but also it goes back to leveraging our network. We also bank for BAF in Tanzania, if I may that, and it's a key focus area for us.
Can you elaborate a little bit? What do you mean by that?
Yeah, and very good thing. We are a correspondent bank for about 21 banks based in Tanzania.
Okay.
What that means is that we do the dollar clearing for these banks for their international transactions where they have to send money, receive money, but also settle obligations in dollars. Okay. So we've got a key strength in that because of our license in New York. And we want to do a lot more than that. In addition to that, we've got a strength, in addition to playing in the trade sector, we've got the strength of a very strong dollar balance sheet. So, and that is leveraging on our parent. So we can mobilize that dollar funding for financial institutions in Tanzania, in addition to facilitating the trade for their clients.
Okay. So I'm tempted to talk a little bit about the dollar, but that will be a topic for another day. Now, related to the transformation that you're having, the concern is that what will happen to the retail clients and other clients who are banking with Standard Chartered now, considering this move? How are they going to be affected? And what's the next step? And how are they going to get the service that they used to get prior?
Okay. So the transition is expected to take a bit of time, a number of months. Now, in the interim, before the conclusion of that transition period, it's going to be business as usual, which means we will still continue to offer the same products we've offered our clients, even from the time we made the announcement, whether it's the deposit kind of products or whether it's the loan products, mortgage, and everything. At the appropriate time, we will inform our clients in terms of anything that will be changing. But as of now, before we get the final approvals from the regulator, it's business as usual. The beauty with this is that the preferred bank, Access Bank PLC, for this matter, is got a reputation for a high standard of service. They've got the scale and experience in terms of integrating businesses and also into their organization. So we're confident about the kind of capability that they have based on their record of the number of transactions that they've done in the market over the past few years.
Okay, perfect. Now, focusing on the internal stakeholders, the employees of Standard Chartered Bank, dealt with the retail business. Trimming your business focus means that you have fewer overheads, which essentially means that you're going to scale down even on the workforce. I'm told that even the building that you're renting right now, you've scaled down from 5 to 3 floors. So that means that there's going to be a lot of cutting. What will happen to the staff? What will happen to the employees who have been affected?
No, good question. I have to say that the people are a critical part of our business. And also in our negotiations, one of the things that we've emphasized is to get a fair outcomes for our people. The buyer, which is Access Bank PLC,
Yes.
has actually expressed interest in continuing to employ our people that they have. They have realized the value, and they've communicated that they would wish to see the people that work with us continue with their careers in Access Bank PLC. So we are confident that they've got the capacity, but most importantly, the willingness to take the people that have been serving our clients, and they've recognized the value, like I said, that our people bring to the table.
Okay. So was this a very critical part of negotiations between Standard Chartered and any bank? Because when we talked last year, you'd say you're looking for potential buyers in the bank that you enter into an agreement with. So the part of having the welfare of your employees taken care of, was it a critical part to the deal? And on that, can you just give us a bit of an update of the negotiations? Are they complete, or what is the stage?
So definitely, I mean, you're 100% on that. We said it then, and we made that commitment that all through the process, one of the key factors we're going to ensure that we emphasize is the outcome for our people. And this has gone on all the way up to the time that we've picked on Access Bank PLC in terms of assuring us what kind of proposition and kind of future they have with our people. Now, in terms of the negotiation, we received a number of inquiries, but also in a number of proposals from very credible, well-known, both local and regional banks. And it's all because of the kind of franchise we have, the kind of brand, and the kind of reputation, and also the client base that we have. So this went through the process in terms of determining who had the best proposition for the clients, but also for our people. Right now, where we are, we entered into an agreement with Access PLC that will purchase all the portfolio in Tanzania, and all this is subject to regulatory approvals. So from now going forward, when we secure the approvals, A, will keep our clients informed. B, we will ensure that all stakeholders are informed, and we do adopt a very high standard of compliance to any regulatory requirements. So we will make sure that we stake it out and take all the time it requires to engage with the regulators until we have the final sign-off. That is when we'll do the transition from the business to the buyer.
Okay, so speaking about the regulatory requirement, immediately when the news came out about Standard Chartered entering into an agreement with Access Bank, we, the citizen, reached out to the central bank, reached out to the Bank of Tanzania, and they gave the green light. They say they have no objections so long as everything is passed on to the law. Yeah. The process is expected to take around 1 year. I just want you to tell us when exactly, if at all, you're in the know, will everything be complete and we'll now see the new Access Bank looking over the retail business that it has acquired from Standard?
Good question, which is being asked by a number of people, including our clients and our staff. So, like I said, what came out a couple of weeks ago was to announce that we have gotten into the agreements with Access Bank. Them buying interested in the SCB subsidiaries in the markets that I've mentioned, but also in the retail banking portfolio. These approvals are going to take different or various periods of time to conclude. And I can't say that they will be concluded at the same time. So for us here in Tanzania, we are we are looking at this taking a few months from where we are at the moment. But like I said, we subscribe to a very high standard of compliance in terms of the regulatory requirements. Ourselves and Access Bank will make sure that we meet all the requirements, all the requirements coming from the regulators, and at the appropriate time, we will be able to announce or to inform our clients and our people. But we expect this to be concluded somewhere within probably 12 months from now, anywhere between 6 to 12 months.
Okay, so the significance of the role that Standard Bank has played in Tanzania's financial sector is quite known, it's quite prominent, to a point whereby you had become the third most profitable bank in the country. So now that you're making this transformation, you're cutting back some of the areas where you operated. How significant or at what percentage was the retail business contributing to the overall revenue of the bank? And what does this exit in this specific portfolio mean for the profits moving forward?
Oh, good. Thanks for that observation. We've actually maintained a very good franchise in Tanzania. And even during this period when the decision was announced, we've continued to do very well. We did very well last year, and we came in as the most profitable bank in Tanzania. So this is on the premise of the support we get from our clients, the people that we employ, and of course the kind of solutions we bring to the market. Like I said, the bank remains profitable, and even with the sale of the retail portfolio, the bank will remain well capitalized, highly liquid, and the margins will not be impacted. So the CCAB, like I said, on the top line contributes about 86%, and the bottom line probably upwards of 95%. So yes, we'll be losing a portion of our balance sheet in terms of and also our business, but then we're going to use the excess capacity that is created to invest a lot more in the high growth or the high potential businesses within Tanzania. It gives us a better focus to scale up a lot more in the areas that I said that will form the focus of the bank going forward.
Okay, so I want us to look a little bit about the digital influence, which is quite pervasive in different industries. Now, in banking, what are some of the top digital trends that Standard Chartered has its eye on that will help you as you transitioning into this new business space?
No, that's a good one also. We've led in a number of initiatives in Tanzania, and I think the latest one was the all digital bank, from onboarding to servicing, all done digitally, and that has gone a long way in terms of boosting financial inclusion within Tanzania. Now, on the corporate side, we've got the platforms, cutting edge, that offer cutting edge solution, which is the platform is the straight to bank next gen, which gives the convenience to our clients to reach us, to bank, to make decisions from whatever they are, and even initiate transactions for trade using the platform, and also do their other payments. So amongst the trends that we continue watching that will inform where banks or financial services are headed is artificial intelligence, definitely going forward. Distributed ledgers in terms of offering more security in terms of trade transaction. Use of big data in terms of the analytics and being able to get insights from our clients, and then make sure that we are able to give bespoke solutions to the clients using the data that we collect from the clients. But also we're seeing entry of payment service providers coming into financial services. We're seeing a more prominent play by the mobile network operators, and also integrators for payments agency. So there's a lot more that I think we can still do between ourselves and fintechs and other mobile network operators But I think the new technology is going to offer a lot more in terms of capabilities and the kind of solutions that we can give to our client.
Okay, so with every change, there's definitely going to be a little bit of hurdles that will have to be surmounted. What do you expect will be the biggest challenge as Standard Chartered Bank makes this transition?
No, that's a good one. We've gone, we've done quite a bit in terms of socializing what we want to do. And I think for us, a key focus for us, like I said, is that to ensure that we've got a fair outcome for our people at the end of the day, but also to find a very good home for our clients. So those are some of the two very important factors. So challenging, I can't say that is plain vanilla, we'll get it done in a day. But at the end of the day, we're very confident about the buyer in terms of having the scale, having the investments and the kind of products which will meet the requirements of our clients in Tanzania from the retail perspective. So challenge will be on the transition for our people, and that we've spent quite a bit of time to ensure that everything goes well. And then at the end of the day, it's the migration of the business, the systems, and ensuring that the propositions are similar and that the transition is seamless to what the clients have been faced with.
Okay, perfect. Well, Mr. Herman, the future looks bright for Standard Chartered Bank. That will be it for today. Until next time, hopefully everything will go well.
Thank you.
So that's a wrap for today's episode of the Citizen Exclusive with Mpoki Thompson. Until next time, bye-bye.